Hi everyone, I'm Ken from Crypto Trading KS. If you're new, a very warm welcome and welcome back CTKS family. My goal is to help you to be more of a financial and emotional blessing to yourself and those you love. Having been inside financial markets for nearly 40 years, I'm going to share all the hard knocks that I've encountered during that time. I'm going to tell you what's actually important and what's just fluff. If you really want to make money inside financial markets, I can help you to do it, but you have to face some hard truths. Also, you'll need to learn how to think differently. I'll help you with both to help you to get the life you've always dreamt that you know that you could have. Let's run the numbers. Rule 446 is incredibly important. To explain what happened in the crypto market and the stock market, we need to know that the two are intercorrelated and interdependent. By clicking on the Market Analysis tab from CTKSnews.com, you get economic data releases. Two releases were really important in the previous trading session. Michigan consumer sentiment preliminary came out much weaker than anticipated. This drove the DXY down and caused a subsequent rally in the stock market and crypto. As well, the New York Empire State Manufacturing Index came in a lot weaker than anticipated. These combinations of factors drove the US dollar down and caused a rally. It caused a rally because so many people were going short inside the markets. In fact, what we saw with the dollar when the University of Michigan Consumer Sentiment report came out much weaker than anticipated, the DXY started to sell down. And then the Empire State Manufacturing Index, weaker than anticipated, also caused the dollar to decline in value. The dollar is very much at the present time inversely correlated to the stock market, commodities, and crypto. By understanding the market pulse and understanding CTKS structure, which is where smart money buys and sells, yesterday we were already pointing to a turnaround in the major indices. This is why it's absolutely vital to keep your eye on the Tier 1, Tier 2 and Tier 3 charts, especially their structural levels. If people are not stacking probabilities, they wouldn't even look at the DXY, and they certainly wouldn't cross-compare the DXY with Bitcoin and see as the DXY was fading, Bitcoin was rallying, and this is what we see currently. There are real structural issues inside the markets which are rallying crypto and the stock market. A weaker dollar means less negative downward momentum on stocks, commodities and crypto, and we can see the S&P 500 futures bounced off that technical support that we were talking about yesterday. If the major indices bounce from structural levels, you can bet crypto is not far behind. The S&P 500 is one of the Tier 1s. It's really important. When the S&P 500 futures turn around, that means the global markets turn around with it. We had extreme fear back on October the 3rd. Really extreme fear. Since that point, the fear has been leaving the markets as so many bargains are abounding. In yesterday's video, I talked about profit improving across different economic sectors. Typically, when we get a big push down in extreme fear, we get a bounce and it continues on and creates a rally. It's looking pretty much like that. We could be at the very formative stages of a rally throughout the stock market, commodities, and crypto. When the markets go green, so too do the headlines. Bitcoin could rise up to 45,000 in January once a spot ETF is approved. This is according to digital asset manager 3iQ. It's widely known that in the crypto space, the ETFs are going through an approval process with the Securities Exchange Commission. The American billionaire Paul Tudor Jones made over $8 billion as a hedge fund manager. In May of 2020, Jones said that it's good to have crypto 1 to 2% of your portfolio in Bitcoin. In 2021, he said not 1 to 2%, 5% in Bitcoin. He also noted that earlier this year, the US is very against crypto as it tries to protect its banking system, but crypto adoption is absolutely inevitable. With major bank failures and people getting ever increasingly concerned about the stability of the financial system. When a Bitcoin ETF is approved, it will signify a major change in the adversarial relationship between government regulators and the crypto industry, and this will unlock an absolute tidal wave of money. And the regulators know it. This means if you want to get into Bitcoin, now is the time. People who have applied the CTKS method to the Bitcoin chart already knew why Bitcoin came down, and it was because of structure. There was substantial structural resistance between 28,581 and 29,322. As Bitcoin surged up because the DXY surged down, it pierced all of these sell levels. The sellers therefore gained weight and pushed the price down. But the reason that it came up so dramatically and so traumatically, there were just so many shorts in the market. The market has been expecting a sell down. Therefore, the shorts have become more and more confident. The market likes to balance out positions. It takes a long time to learn that there's no such thing as a sure thing, but you can stack probabilities and you can do very, very well when you have an unexpected negative outcome, a loss, an upset, or you may feel that you've missed out on something. The key is please do not enter the doom cycle. Don't say that the cause is something external to yourself. That is all about blame, and blame disempowers you, because if the problem is outside yourself, you need the problem to fix itself before you can succeed. Instead, with awareness and understanding, we can enter the insight cycle, where we focus on learning. If the market doesn't go our way, we're kind to ourselves and say, what can we learn from this? We forgive ourselves about what happened and we say, how can we do this better? This leads to massive empowerment. Every loss that you experience across financial markets is just a tuition fee. When we enter the doom cycle, we have compounding losses. We don't focus on the rule to do better the next time. We focus on shifting the focus outside of ourselves to anything and anyone else. And that contaminates all of our life, all of our relationships, and creates cascading problems. We do not ever want to enter the doom cycle. It's so profitless. Professionals have an abundance mindset because it's vitally important. Professionals always do what non-professionals don't do. And the problem is that wherever you go on YouTube, there's very few people that will give you the door into the professional mindset. Instead, they just fuel retail hype, and retail hype may be good for their views, but it's really bad for the people who watch. To be more of a financial blessing to yourself and those you love, focusing on the professional side of this equation is the key. It can take literally decades of trading and investing experience to understand that your mindset must facilitate wealth, or else you'll just self-sabotage. That's why embracing positive excellence is so incredibly important. Many people think that they can get rich very quickly. You can get rich quickly and you can lose it all quickly. A lot of people take the negative excellence path towards wealth, and they end up in the newspapers, inside and in front of the law courts. Going slow to go fast is the key. You'll find that the best way to become profitable is to understand the structural levels in the Tier 1, Tier 2 and Tier 3 charts. Then stack probabilities and understand where the structure is and how the price reality is reacting to that structure. That's what we did in yesterday's video, which predicted a jump up in price. Unfortunately, so few people are prepared to put in the hard work that comes with making a success of your own life. Getting into anything and gambling is a real problem. You want to have the knowledge. Always remember, professional gamblers do not gamble. They run the numbers. You can do incredibly well in financial markets. In fact, it's almost limitless what you can do. But you must have the knowledge. You must be able to stack probabilities. You must know where structure is inside the Tier 1, Tier 2 and Tier 3 charts. The key to absolute wealth is just embracing the losses that are handed to you by the market, because they're lessons that you pay for. It's just the tuition fee. When you get synchronized in with the market, you'll find that the market controls your return. And that return is always based on your knowledge and your courage. The market always penalizes blame and gambling. Always be prepared to know what you will do, what you are certain you will do, if price goes up, goes down, or goes nowhere. Financial markets are uncertain. That's where you get the return from. You need to be certain as to what your actions will be. This does take time, and it's a different way of looking at the markets, but it's the only way that will get you consistently profitable. Whenever you receive a loss, just think about Rule 212. Markets demand the tuition fee of losses, and this is for you to learn. We all need to become learning machines inside financial markets. It's the only way to consistent profitability. As soon as people blame, they stop learning. They become stagnant. They sit down and point the finger away from themselves. The focus of this channel is to help you to become more of a financial and emotional blessing to yourself and those you love. The starting point of that is to identify what zone you currently inhabit, and everybody goes through Zone 1, Zone 2, towards getting out of those zones into Zone 3 and Zone 4. If you find yourself in a lower zone, don't worry about that at all. Be kind to yourself. It's just a progression. To become consistently profitable, you must delete blame from your life, every facet of your life. How we do one thing is how we do everything. When we blame, we disempower ourselves, and when we blame inside financial markets, we suffer increasing losses. People always ask me, Ken, how do you become consistently profitable? And I say, the key is to give up blame. This sounds really counterintuitive, but the concept is the financial markets are always giving you lessons. If you don't learn the lesson will come back even more expensive next time. People wipe out their accounts simply because they get cascading lessons, the same lesson cascading multiple times, and they don't learn. They blame. It can't be their fault that they lose money. It must be someone else's. And I always say to people, did you press the buy or the sell button? And they say yes. Did you pick the time or the duration that you would invest or trade in? They would say yes. And I would say, therefore, you had total control. This is a really uncomfortable truth, but I think it's very important to explain. I've been inside financial markets going on 40 years. If somebody told me this when I was just starting my career inside financial markets, it would have made me an absolute fortune. People inside financial markets are incredibly successful in other parts of their life. They have to be to enter. They're often literally the top 5% of intelligence. If you're in financial markets, if you're in crypto especially, you are an innovator, you're forward thinking. This means that you have all the right ingredients. The thing that holds 99% of people back is just simply blame. If you want to become rich, delete blame from your life. If you want to be happy, delete blame from your life. When people go through as many years as they require to get to the bridge between Zone 2 and Zone 3, they basically say, never again, I've had enough. I have to do differently. I've blamed just about everything for my losses and it's not them, it must be me. How do I learn? This is a brilliant phase of life. This is the point at which people become wealthy. It's easy to blame and hard to learn. And if you're still here after all of this discussion, you're just incredible. That means you're an awesome human being. You're focused on learning. And learning is the central focus of our channel, of our community. In celebration of your achievement, just perhaps pop down the word learning or something that involves learning, some comment that involves learning inside the comments on YouTube. You have my absolute admiration. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.